Our third topic is financial wellness, so personal finance and cash management. I've got some best practices here. I don't want to run out of time. I want lots of time at the end for Q&A. So I won't go through all of these. I think we're all pretty much aware of some of the financial wellness best practices. I will say, getting everything on one dashboard is super important. And that's why I think it's great to work with wealth tech partners like these, because they are helping you to kind of get a full view of what you've got and having a full picture, sharing that with your partner, sharing that with your accountant if you work with one. So everyone's on the same page. I would say that's kind of our message at ShareSite, is to have everything on one page. And of course, money is one of the number one stressors for partners as well. So being able to have everything there and having those open conversations, we think is really important. Xero couldn't be with us today, but they are one of our partners. So I wanted to just talk about them very briefly. When it comes to personal finance, we do have an integration with Xero, and it's an interesting one. It goes both ways. So you can send your sells, dividends, and buy sells and dividends to Xero, and you can pull your bank cash balances into ShareSite. This is very popular with SMSF or SMSF users. They sort of unbundled themselves from traditional SMSF software, and they use Xero to be able to get that P&L and understand how they're doing as investors, and of course share that with their accountants if their accountants are using Xero as well. So my questions for the partners for this section, and the partners are Jason from PocketSmith and Nathan from Ativo. First up is Jason at PocketSmith. I'm going to ask you the same question that I asked in one of the earlier sections. And that is, what trends are you seeing? So I think this is interesting from a personal finance perspective. What trends are you seeing amongst your users at the moment? It doesn't have to be investing in particular, but cash, buy now, pay later, spending. What are you seeing from your end?
Thanks, Angela. Well, what we're seeing is that our users are exploring the multiverse. And let me explain. COVID and lockdowns helped us imagine a better work-life balance, right? And so during COVID, social media amplified human sentiment in real time. And we got to see models of work and wealth creation, new ones, just emerge very quickly. And what we're seeing is our global customer base responding by embracing this change in order to find more fulfilling lifestyles. And people are understanding how life can be exciting and full of possibilities again, and that their futures contain a multiverse of lifestyles. So let me explain. So for every person who's like a part of the Great Resignation, and we all know at least one, there's another person doubling down on their ambitions at work. For every other person looking to achieve FIRE and retire early, there's another who's passionate about their work and sees it as a part of their identity. And for every nomad who can't wait to travel again and work remotely, there's another preferring to sink their roots and double down on their community. So all these options are valid paths to financial wellness, and they're inspiring and they're thought-provoking. So it's always worth asking what's right for you. So what we're learning is that it's important to re-examine the why behind your investing and cash management journey, just to make sure that it's a good match for the lifestyles that you want. So the other obvious question is, well, how does someone explore this multiverse, right? So does anyone have Dr. Strange's phone number? But this is where technology can help you out. So our users combining two features we're well known for, that is financial forecasting and what-if scenarios, to game things out. They test the outcomes of different lifestyle choices on their cash flow, which then informs the budgeting and investment strategies for each one. So Laura mentioned earlier that you should not stick to a rigid strategy. And this is really part of the homework that helps you get aligned with your goals. And when you look at alternatives, you end up asking the right questions for your investment strategy. So from there, you can make a better call using the wealth tech you've seen today, or you can seek advice about risk, choices, asset allocation, and liquidity for each possible scenario. This works for the changes I mentioned earlier, right? So like, what if I quit my job, if I'm turning two incomes into one, or if I'm starting a side hustle or leaving the country? But also for our rapidly changing environment, coping with inflation and rising interest rates. We talked about forecasting up to 30 years ahead, but like, how are we looking in a couple of years when we refix at 7%, for example? What changes can we make today to stay ahead of the curve? So the trend we're talking about here is that our users are taking the time that they have now to not only visualize, but to explore those future possibilities. And it's such a good thing to do. And it's fun because you're thinking about a future you. And you should lean on technology, so products like ours, or just a spreadsheet to help you get there. So the big takeaway from our trend is to explore your multiverse and flesh out the detail, and then use technology to turn those future stories into your actionable financial details.
Thank you. That was a very positive outlook. I usually expect something to be much more doom and gloom when it comes to personal. I love it. I love that. I love that for every person.
We're here about fitness.
Someone on the
We're here to give the hugs.
I love it. That's awesome. Very positive outlook. Nathan at Ativo, what should investors be thinking about or prioritizing when planning for retirement or nearing retirement?
Well, I mean, I think the first thing is that everyone should really have a basic understanding of their needs in retirement. So that means understanding how much income you're probably going to need and when you want to retire. So those two factors alone will determine how much or the activity you should be doing now during your employment time. The other thing to be considered, to be mindful of, is that no one really relies on super alone to retire. So bringing in all your investments and income sources is also very important in terms of the planning. But I think the easiest kind of start you can make is, I mean, we've got this great tax effective investment vehicle called superannuation. And I think the most important thing you can do whilst you're employed is to really make sure that you're in the right investment options and you're investing as much or the right amount according to your income and expenses into that superannuation. So that unfortunately falls into personal financial advice, and that's why you have to go see a financial advisor. So, but if you want to avoid paying that $3,000, you're going to have to use an automated platform like ours.
Yeah, it is good advice though about super. I mean, it's the biggest investment many of us have outside of our home, and a lot of us don't really pay attention to it. I know we'll joke that people will drive across town to save $5 on a burger meal or something, but they have no idea what's going on in their super, which is pretty scary. But yeah, that's really good. Thanks for that. And then for both of you, and I'll start with Jason again. This will be the last question for this section, and then we'll go to the live Q&A. So Jason, what's the number one thing that investors should be doing in terms of their financial wellness in this market?
Well, we think the number one thing to do is to share the journey. We've been talking to people from all walks of life and at different stages of their investment journey. And one topic that comes up again and again is the challenges they face communicating about money with their loved ones. And like, we totally get it. As wealth creators, you want investing to be a family affair. But you're probably the only one who drives the finances in a household. And you're responsible for managing cash flow, paying bills, managing investments, insurances, attending conferences like this one. We call you the home CFO. And it's a common reality because your household is strapped for time, and this is a good division of labor. But there are downsides, right? So for the home CFO, finances can be difficult to bear alone. We talked about stressors earlier. And for the other stakeholders in the household, information overload is overwhelming, and too little information is also stressful. So communication, sharing the journey is hard, but very important, as it reduces that strain on relationships and it makes it easier for you to plan together. So to do this, you just really need to make sure there's a platform for sharing with your spouse, with your kids, with your advisors. Find out what some of those key metrics are and stick to those and have regular catch-ups.
Love it. That's great. What about you, Nathan? Number one tip?
Yeah, the number one tip, it's hard to squeeze it down to number one, but I mean, obviously, don't pay too much for your interest is probably number one, but I'll go number two. Also optimizing your investments, like I said, in superannuation, making sure you're in the right investment category, make sure you're not in a conservative if you're 23, make sure you're maxing out, pushing as much as possible into your superannuation so that once you retire, and I know it may seem a long time away, but it'll be worth it once you retire and you can have a dramatic effect. I mean, we're talking, millions of dollars in some cases by just changing by click of the button inside of your super options.